If you think the 2008 financial crisis was bad, just wait until you hear what Michael Burry has to say about the future. The hedge fund manager who gained fame for correctly predicting the housing market crash is sounding the alarm once again, this time with a dire warning that could change a generation. In this video, we'll discuss none other than Michael Burry's latest insights and reveal what this could mean for your money, your job and your future. Are you prepared for the collapse that's coming? Watch this video till the end to find out. Burry has been freely sharing his opinions and predictions on Twitter under the handle @MichaelJBurry, and although the market has been down, the Fed has not officially stated that we're in a recession yet. But let's be real, all the risk factors are flashing hot red right now. With the Fed raising interest rates and the collapsing of banks, it's hard to deny that the worst is yet to come. What's interesting is that Burry deletes his tweets shortly after uploading them, which makes him even more mysterious and exclusive. So what are his warning signs right now, and what should we be doing with our money? While most people were struggling financially, Burry was actually making a fortune for himself and his investors, raking in over $100 million for himself and $700 million for his investors during that period. It's no wonder why people are still talking about him to this day. And now with the current bank crisis that's been happening since early 2023, Burry is back in the spotlight. The Silicon Valley Bank, responsible for some of the world's most cutting-edge tech innovations, was shut down by state regulators due to a huge drop in deposits, mostly thanks to rising interest rates. And this is just the beginning. Many more banks are expected to fall in the coming months as they try to recover from pandemic-related losses. In his tweets, Burry mentions inflation rates and the current interest rates set by the Fed. He believes that we may see another inflation spike soon, which could have serious consequences for the economy. The highest recorded inflation rate since the Great Recession was observed in June 2022, with a record high of 9.1%. While the January numbers was recorded at 6.4% and the February was 6.0%. Burry thinks that by the second half of the year, inflation might reach numbers similar to those observed in June 2022. However, most worrying are Burry's recent tweets about the stock market. On January 23, 2023, he tweeted a cryptic message with only the word maybe, accompanied by a picture of a graph showing the S&P 500. Burry circled a particular area that sees a bit of an upward trajectory from September 2001 to March 2002, hinting that this may be the last sign before the S&P 500 value starts to go on a downward trajectory until next year. Speculation is rife that Burry is urging his followers to consider selling, which was solidified when he tweeted sell a week later on February the 8th. Many people believe that this tweet was sarcastic given his previous tweets about selling. But whether or not Burry is being serious, it's clear that the financial world is definitely on edge. Apparently, after staying silent for weeks, Burry tweeted some ominous things about the state of the financial system. He tweeted something like, "It's always the same. People full of hubris and greed take stupid risks and fail. Money is then printed because it works so well, and that does not sound good." And then the next day, Burry tweeted, "This crisis could resolve very quickly. I am not seeing true danger here." What crisis is he talking about? Some people are saying it's the banking crisis that started with the collapse of SVB, but others are confused because Burry also tweeted something about lazy ESG funds causing the collapse of banks. With all the tweets, fears and predictions about the ongoing banking crisis, it's hard not to be concerned about what's going to happen next. Burry is sure to stay active on his primary means of communication, Twitter. But let's not forget that he's an analyst. He's probably analysing trends and patterns as we speak, and trying to figure out how events such as this will affect stocks, the S&P 500 and the economy at large. Burry is known for being very bearish and usually buys and sells stocks every quarter. However, it's worth noting that a significant portion of his current portfolio consists of Chinese companies. As of now, Burry doesn't believe that the banking crisis currently unfolding is a big enough threat for everyday people to worry about, but he acknowledges its existence. Despite the uncertain times in the market, Burry continues to buy and sell stocks he believes are of value. Now, I know what you're thinking. Should we follow Burry's every move blindly? The answer's no. However, it's always worth taking his advice with a grain of salt, given his history of making some successful predictions. But with all the uncertainty in the market, it's important to stay diversified, especially if you have over $250,000 in the bank. This is not financial advice, as Burry's warnings are not either, but it's essential to stay informed and aware of the current situation. So what do you think? Are you worried about the future of the economy? We'll have to wait and see how everything plays out in the coming months. And that's all for now. Hit the like button to show your support for our work. Also keep in mind to press the bell icon and subscribe to the channel to never miss any updates from us. We'll be right back in the next video. Bye for now.